All right. Good evening and welcome back to another story for the continued series of technical analysis basic. This is your host Harsh again on behalf of GTCFX. A warm welcome. We have with us our friend uh, Corazon, and now Arnold has joined us. Welcome back, Arnold. Good to see you, brother. Corazon, I think you have joined in for the first time here, if I'm not mistaken. Uh, so if that is the case, please feel free. We are a very small family. We are into the sixth session of the 10 series uh, educational webinars. And I have also posted the link for all the past videos, just in case if you would like to revisit them. And please feel free to write to us as well. I'm going to leave the my personal official email address at the end of the session as well. All right. So just to wrap up what we have done till now, we've done five stories, actually five sessions, starting with the candlesticks, support resistance, trends and trend lines, Fibonacci ratios. The last one was risk management and time frames. Today's session is a bit on the technical side, and it is called trading zones. So by the end of today's session, we'll be able to clearly identify what are the trading zones and what are the different trading zones, how to identify where the market is lying, and how to help ourselves to trade in case of a transition from one zone to another zone. That's the most important part. So while others are still joining, sit tight and enjoy. Let's get started. Please feel free again if you have any questions, kindly let me know. Once again, these are your sessions. These are absolutely your sessions. I'm just a facilitator here. Mohammed, welcome, brother. Good to see you back again. And what I was saying was these are completely your sessions, and I'm just a facilitator here. So at any point in time you feel you want to stop and get into a discussion or ask a question, kindly write to me, send a message on chat, or open your mic and speak. It is absolutely your wish, and we will abide by what the discussion. All right. We'll be going on for the next 45 minutes or so. First the theory, and I will try and wrap it up with the chart as well. And also, I would like to welcome those who are joining us from the YouTube live session. A warm welcome to all of you there who are joining live on YouTube. Please, if you do have any questions, type in there on the session chat. If it's not possible to address in the session, I will do my best to do so. But if it's not possible, I will readdress after the session is done. Thank you very much. So let's get started now. Today's topic is the trading zones. It is a bit on the complex side, but we will do our best to discuss in a very simple and lucid manner. So relax and enjoy while we read through the risk warning and disclaimer before just starting the theory. So over the counter margin derivative contracts, including contracts for difference and spot foreign exchange, are complex instruments and come with a high risk of losing money rapidly due to the leverage they offer. You should consider whether you understand how these products work and whether you can afford to take the high risk of losing your money. Independent professional advice is highly recommended before any kind of investing. Right, and this webinar serves as an educational purpose and will not include any financial recommendation or advice whatsoever. Thank you. All right, so let's get started with the trading zones. Now, we all know what are trend lines, correct? we've done the trend lines in session 3. We also strategized how to find out a trade setup in an uptrend, how to find out a trade setup in a downtrend. So we've done that. Now, continuing to that point, let's try and define the zones here. North of a trend line is buy zone. All right. North of a trend line is buy zone, and south of a trend line is sell zone. All right. I repeat, sir. It's very simple to understand, right? North of a trend line, anything north of a trend line, whether I'm not defining a trend line here, it could be an uptrend line or a downtrend line. All right. Anything north of the trend line is buy zone, and the south of the trend line is sell zone. All right. The next screen says it all. So on the left hand side, if you look at the trend line here, that's an uptrend line, correct? Anything north of that uptrend is defined as buy zone, and anything south is defined as sell zone. So if the market is here, is if the market is somewhere here uh, in a rising market, we say it's in a buy zone. And if the market is cutting the trend line and entering to the south side, we would say that it is entering or preparing to enter into the sell zone. All right. Now, if we were in the class, I would just draw this downtrend line and ask for you to decide what the buy zone and sell zone would be. But here it is not possible. So that's a downtrend line for us, and the north will remain north, correct? The north of the downtrend line or uptrend line is always buy zone, please remember. And the south of the trend line, whether downtrend line or uptrend line, is always the sell zone. Now the question you might have in your mind is why are we taking the pain to define the zones here? It is very simple logic. Whenever the whichever zone market is, we've got to trade in that direction. As simple as that. For example, markets or an instrument is in the buy zone. So predominantly we are going to buy first and sell second. So we are going to enter buying and then exit selling. All right. So that there's no confusion in the logic that we are going to apply to trades. And when the market is in a sell zone, predominantly we sell first and buy second. For example, if I draw a if I presume that the market is rallying like that, right? If this is the market movement, what are we going to do here at this point in at this juncture? What will we do? That is our A, B, C. We'll wait for a signal and enter buying, correct? We'll place our stop loss below that low, and then we'll target the Fibonacci extensions, whichever they are, correct? So we end up, when the market is in the buy zone, we end up buying first and selling second. We enter market buying and exit selling. Similarly, when the market is in a sell zone, what are we going to do here at this point? That is our A, B, C, D. Again, it is our A, B, C. So what are we going to do here? We are going to sell the market at C, place our stop loss here, and we'll target the Fibonacci extensions, correct? So it's very clear. We've been doing this all the time. When the markets are in the buy zone, we buy first and sell second. When the markets are in the sell zone, we sell first and buy second. What are we supposed to do when the zones are changing? this is what our discussion is going to be for. That is not going away. Okay. So today's discussion is going to help us decide what are we, what should we do, or how should we enable ourselves to understand when there is a transition period. Transition means market is in the buy zone and it's now wanting to enter the sell zone, or market is in the sell zone and it is now wanting to enter the buy zone. This is the most crucial phase because markets are always going to keep changing their zones. It is not going to happen that market is always going to be in an uptrend or always going to be in a downtrend. It's going to be in an uptrend for a while, then it's going to break the trend lines and come within the downtrend, and then again it's going to break the trend line and turn into an uptrend. So the most baffling or the confusion period for any trader is to identify when the zones are within transition, when the zones are changing. All right. And this discussion is regarding to help us how to trade or how to deal with the markets then. All right. We have another friend, Mr. Ajide. Welcome again. Thank you for joining. We have a we have a we have sent a YouTube link for all the past videos for your reference in the chat. You can please go through that, and we'll also send you the leave with the email address. Narendra Pathak ji has also joined. Thank you, Narendra ji. So sit tight and enjoy because this session is a bit tricky, but it's very important. We are going to do it in a very simple way. Here I have tried to guide us all with two scenarios. One, the market is already in the up buy zone, that is a rising market. This is the buy zone. There is no difficulty. We are not going to have any difficulty in dealing the market here. But when the trend line breaks, how to decide that the trend line is broken? So that is the screen for. When can we decide that market has entered from buy zone to sell zone? Number one, when complete bearish body forms in the sell zone. Please listen carefully, brothers. When complete bearish body forms in the sell zone. So that is a sell zone. We got to allow one complete bearish body to enter the sell zone. If the wicks of the candle are touching, it is okay. Let's say half the wick is in the buy zone and half the wick is in the sell zone, it is okay. But if the body is touching, like say, like if the body is touching like this, okay. So here the bearish body is touching the zone, the trend line, it is not allowed. This is not a break. This is a break. Is it clear, brothers? Wick touching is fine, but body should not touch. That candle, when this candle appears into the sell zone, the trend line has broken. Is that clear, sir? All right. I hope that it is
Clear,
clear.
sir. Clear, clear.
Okay. Now, exactly the opposite. When a bullish body enters into the buy zone, it is the break of a trend line. Yes, thank you, Ajide. Mr. Ajide. I think I'm seeing you for the first time, but it's okay. We are going to remain in these sessions for another five weeks, all right? And it's going to be an interesting one because we are going to touch base with the Elliott wave principle from the next week. So 3 sessions of the Elliott wave principle as well. It's going to be interesting. So please stay tuned. You're already signed up for all the sessions. Okay, where sell zone to buy zone. So here we've got to have a complete bullish body into the buy zone. All right, wicks are touching, it's okay, but the body should not touch. I hope these two things are clear. When we enter the sell zone, the body should be completely there in the sell zone, and the buy zone, the body should be completely there to confirm that the trend line is broken. Many traders make a grave mistake of understanding that the trend line is broke just by half a candle being out. That is not a break, that is just a test of the trend line. Okay, now this session is not going to be easy for us to identify clearly on the charts. It is going to take time, it's going to take uh, effort from your side practically, and over the period of time, we will understand what to do and how to trade. But theoretically, I'm trying to do my best to make you explain and understand what should we do or what are the possibilities when the market enter from the buy zone to sell zone. All right. So first half we are going to deal what are the possibilities to trade when the market is entering from buy zone to sell zone. All right. So here's the case one. So the situation is like this: market is an uptrend. Here's the market which is in an uptrend. Next situation, it breaks the trend line. So there we have the trend line break right across that point, and this shows a bearish body is out in the sell zone. So that is the situation, breaks the trend line. Now it can do something like this: new channel created. So instead of after breaking the trend line, it's not necessary for us to simply go and sell the market blindly. We should not do that. In any case, that is our A and this is our B, correct? After the break of the trend line. So we've got to wait for a C to appear, correct? Are you okay with this? We got to wait for C to appear before selling. Is everyone okay? Those who have attended all the classes, Arnold and Mr. Pathak, you should be okay with it. And my friends, those who are joining for the first time, please go through the videos, and you'll be fine. If you have any questions, please let me know. So our idea is to find out a C to sell because we are in the sell zone. So let the market go and hit the backside of the trend line. It will form a C. There we can sell. We don't know what is going to happen here. We don't know what is going to happen right inside. It is okay to sell at this point and stop loss at A. Perfectly fine. Now we've got to allow and wait for the markets to go and print a new low. But instead of going and printing a new low, if the market stops in between and prints a new high above the C, at this point we got to understand and we got to clearly understand that this market is not in a mood to drop. I repeat, sir, at this point market is telling us a clear story that okay, sir, I broke the trend line, I entered into the sell zone. I actually should be going lower, but that was an accident. I really don't want to go further lower. Please try and get into the long side. So at this point in time, as a trader, we have got two options. Remember, we have sold here. So option number one, take that small loss and come out of the trade. Don't wait. And option number two, wait for a pullback, get out of the short and buy here. So we have to enter buying at this point. At this point, we enter buying. So what happens? New channel is created. So that is the new channel created. You got your A, B, C, and D. Then you draw a trend line with this channel. So market was moving in that channel earlier. Now the market is moving in this channel. So new channel is created. Market stays in an uptrend. Over a period of time, it's going to oscillate between the two trend lines. Why? The upper trend line is going to give resistance. So the market is going to find downward pressure, and the second trend line is going to provide support. So market is going to bounce higher from that point. All right. So it's going to oscillate between these two trend lines for a while, and the moment the resistance of the old trend line is above the previous high. Let's say this is 100, or let's say this is okay. Let's say this is 100. The moment the resistance on the backside of the trend line crosses 100, the market shoots up, breaks the previous high, and the uptrend remains, or uptrend continues. All right. So eventually, what happened? The market was in an uptrend. The market is still in an uptrend. All right. We were ending up buying earlier. We are still buying. Only one trade we took short entry, but that also at one point in time we got to exit. If we are not exiting, we are going to face some music there. All right. Okay, so that is case one, brothers. Please do let me know uh, if we are okay until this point. Just a message, okay, is fine, and I can proceed to the second case. Okay, Arnold is fine. I hope others are fine as well. Thank you very much. Let's move to the second case. Now, the second case. Now, each case is a story, brothers. Let's not get into the tangle of the jargon words of technical analysis and huge words. All this is a story for us, and wonderful stories are being told by markets every single minute, every 15 minutes, every 1 hour, 4 hour, 8 hours, and daily. All right, so what is the story the market is telling here? Here the story is perfectly in sync with the rising trend line. So second case is sell then buy. The first case was buy. We are not selling at all. We sold once, we exited, we had to exit, and we are now buying. The second case suggests if you want to sell, you can sell, aggressive traders, but ultimately we are going to end up buying. So, how is this going to happen? First thing, trend line breaks. So, here's the trend line. Let me take the pointer. Here's the trend line. It breaks. Okay, can you visualize what is happening, what has happened here, please? Can you visualize what has happened earlier? Okay, let me draw it for you. Let me draw. Is that okay? Market has been rising from that point until this point. And then you have the last A, B, C, D. Remember your inner trend line or immediate trend line A, B, C, D. So that's your inner trend line A, B, C, D. And suddenly the trend line breaks right, right here. Right here, the trend line breaks. So according to the rules, what are we going to do now? Wait for the complete bearish body to enter into the sell zone. That has also happened. Next, what are we going to do, sir? We are going to make this as A and B. So now we have got down AB boundary. Next, we are going to wait for C to appear at a Fibonacci ratio, at a trend line, and we've got to wait for a signal and everything. And then we can sell temporary. That is your A, it's your B, that's your C. By no means we cannot sell, we should sell if you are aggressive traders and target whatever the Fibonacci ratio are or is, okay? But please remember one thing, that break is of the smaller trend line or the inner trend line. We still are in the buy zone of the intermediary trend line. So which is this zone? If we want to define this zone, it is defined as a sandwich zone. Markets are in the sell zone of the uptrend line and they are in the buy zone, a sell zone of the downtrend, uptrend, and in the buy zone of this uptrend line. So it's in a sandwich zone. There will be a fall, but the fall will be tentative. It won't be a free fall. Okay, there'll be a there will be overlapping waves A, B, C, D, and then again overlapping C, and again D small one, and again C, and again small one. There could be numerous A, B, C, Ds here. So you've got to be very careful if you are selling because ultimately you are in the buy zone of the intermediate trend line. So let the market hit the intermediate trend line. If the market bounces here, then we are back in business, sir. The short positions need to be covered. Okay, we've got to exit the shorts, we've got to enter buying the market here. So eventually what happens? Trend line breaks, we enter the sell zone, we also sell, but eventually on a bounce, if the market bounces, we got to buy here. And this is a you will be seeing case 2 umpteen number of times. I repeat, sir, you will be seeing the second case umpteen number of times, and it is so wonderful to eyes. Okay, we've got our friend Taha back with us. Welcome, Mr. Taha. We've just started, 15-20 minutes back. We are discussing case 2 from buy zone to sell zone. We still have another case to go. It's a wonder to our eyes when we see this bounce happening. And believe it or not, when we go to the practicals, I will try to find out this case for you. But it's not very easy to find out in a running market. If I can find out, it's good. The case too. But let's see, because I don't prepare anything while coming to the session. All right. But I hope that the theory portion is clear. Trend line breaks, prices travel to the longer trend line support, buy on a bounce there. All right. So if you have realized, we've done case 1 where we ended up buying the market. All right. We ended up buying the market. We've done case 2. We sold temporary. That is also not a compulsion because it's a sandwich zone. Markets are going to be tentative. But finally, we again bought on the bounce of the trend line. So, do you realize the significance of break of a trend line? A trend line break doesn't mean that you go blindly on the opposite side. You've got to be very watchful. We've done 2 cases, but we have not sold aggressively. Now, case number 3, sit tight and understand, please. This is the only case where we are actually going to sell and sell hard. All right. And this case is a 5-step reversal. It's also known as a head and shoulder. And I'm sure that every one of us over here must have heard sometime about head and shoulder or have read somewhere about head and shoulder. Now, head and shoulders, they do not happen overnight. Many traders are forced to believe or understand that the markets are absolutely unpredictable They were rallying at one point in time. They were actually going and making just about to make new highs, and suddenly they all reversed. This is what is going around, like the talks actually, but it never happens this way. When the market is wanting to change the trend, now this is pattern is for a trend reversal. Believe it or not, when the market is wanting to change the trend, it will shout out loud, not once, 5 times. It will reverse the trend in 5 steps. The only thing is we need to listen, and we need to catch the sound, and we need to find out the language what the market is telling. All right, so let's try and understand how the head and shoulder would take place. One of the prerequisites of head and shoulder is that the market should have been in an uptrend for a long, long, long time, at least 6 months, or a couple of years, or maybe at least a year, or it could be several years in forex markets. All right, and when such a trend is going to reverse, it forms a head and shoulder reversal. Okay, now let's see if this is catching up. So that's the last A B C D of the rising market. And here's our trend line which is passing through. So the first step the market is going to make is break the trend line. That is the first step. Okay. And when I say break the trend line means now you understand what Hirsch is saying is that we've got a bearish body completely out into the sell zone. So the first step is trend line break. The second step, market will break the support, the previous support, all right, this support. It will break the support and penetrate. Sometimes it may not break the support but just remain shy of it. That is also allowed. But most of the time it will break the support, previous support, and it would penetrate. Now, most of the conventional traders who are used to trading head and shoulders would go and commit short positions right at this price, right at the end of step number 2. Most traders would do that. We do not recommend to do that, sir, because that is only the second step. The risk reward ratio will not suffice. If you go and sell here, I'm not saying it is incorrect, but your stop loss will go right above the top. Your risk is almost double. All right. What we suggest instead that we start preparing for a head and shoulder reversal. So when step number 2 happens, don't go and sell the market, please. Rather, prepare for selling the market. So watch the left shoulder. That is the left shoulder. That is the third step, left shoulder. Remember, the name head and shoulder comes with the shape. I mean, can you visualize a person standing straight on this chart? Here's the head. That is the left shoulder. And we are projecting the right shoulder. A person who is standing straight, can you visualize that this is the head, that's the left shoulder, and we are projecting the right shoulder? We've got to strike at the right shoulder, sir. All right. We've got to enter the market at the right shoulder. So, how to do that? Step number 1, line breaks. Step number 2, support is taken. Step number 3, watch the left shoulder. All right, watch the left shoulder. Step number 4, just draw a straight line all right, and project the right shoulder. Normally, it will be in the same horizon. It is not a rule to be very similar, but normally it would be in the same horizon, the left shoulder and right shoulder combination. Once you projected the right shoulder, that is your step number 4. And step number 4 is the projection. Then allow the market to come to the right shoulder. For example, you have set a price here. All right, there will be a price. This is your A now. That is your B. The Fibonacci ratios will be spread. You would have a price range here that you're going to short the market. So you're actually preparing. We are preparing, and we are inviting the markets to come to that zone, to come to that area, and then we go and sell that. All right. So the right shoulder would be formed mostly by a very sharp rally of the markets. And this rally would be so sharp, most of the time it would give us an impression that markets are going to print a new high. I repeat, sir, this rally would be so sharp, it would most of the time give us an impression that the markets are going to print a new high. But instead of printing a new high, they hit the backside of the trend line most of the time and wait for a bearish signal. That is your step number 5. Please go and sell the market there. All right. That's the 5th step. The 5-step head and shoulder reversal is done. And believe it or not, when it happens, all right, when this happens at the right shoulder, and if you strike the right shoulder with a stop loss above the head, this price mostly does not come over a period of time. It could be 3 months or 6 months or even 12 months or even more than that, because we are in a forex and other CFD instruments like Bitcoin or other coins are trending markets. They don't come back after a head and shoulder reversal. They don't come back very easily. I hope that this 5-step reversal process is clear. If it is, you can confirm, and let me see if I can bring up a chart, because this has happened just a while back. So, and we have traded that. All right, it's not going to be any difficulty to find that reversal. Just a moment, please. We still have 3 more cases to discuss, but before we do that, and before we forget, we need to just find out one very important case, and that is the dollar index. I need to find a clearer chart, because we are doing live sessions twice a week, and during the live sessions we find out high potential trade setups. So those were the setups we did yesterday. I don't know if you were there or not, but it was done yesterday. Now look at the head and shoulder reversal here, please. I'm not asking you. Let's not let's straight away get to the point here. I'm doing the exercise straight away. Just sit tight and watch what happened. It is exactly according to the theory that we have discussed and learned until now. Believe it or not, after the 10th session, we will be doing something different in terms of a theory. All right. And that would be Elliott waves. And you would be you once you understand that wave theory, you would hardly have any desire or wish to go back to any other theory. This has happened to me. It has happened to most of the traders. It would happen to you also. All right. Just be patient for three. I think this is the sixth session. So session number 8, 9, and 10 will be for the Elliott waves. But right now we are not doing Elliott waves. We are doing ABCD because that's what we have discussed. I want you to see the shape here, please. Can you visualize this as a head and shoulder reversal that we just discussed on the paper, on the slide? I can bring up and can toggle the slide. This is the slide that we just discussed, and let me toggle the chart now. Can you visualize, please? That is your head. Somewhere in the vicinity is your left shoulder. That is your right shoulder, and the markets are beginning to cut loose on the south side. Now, see what happened, please. The first step was here. I'm going to write down that as well. So, here was the first step, trend line break. Here is the second step, support break. The support broke immediately, market dragged lower quite a bit after that. We don't recommend to sell at point number 2. If you did that, you see that rally comes so fast. And this is the market. We're not following what fundamental news are saying. This is pure charting. This is pure market. You can actually combine this with what is happening outside. This rally was accompanied after the US president announced tariff wars. The, the trade wars, the tariffs were laid on Sunday, and Monday the markets gap opened higher, the dollar index. But that high was below the previous high, which is the head. And it went up to step number 3. The projection was almost equal step number 4. But we waited for the rally to go and complete step number 5. And step number 5 was a head and shoulder reversal. All right. Now, normally we've not discussed the bar charts. We've discussed the candlestick charts. So I have turned the candlestick charts for you. You can see the pattern here. This is an evening star. If you're still not able to see, I can zoom in further. That was a beautiful evening star. Those who have joined all the sessions, they must immediately recognize that it's an evening star. And what happened after that is all that we know. All right. So this case, I had told you that all cases are not very easy to find out. But this case we've traded since 13th of January. We've been selling on rallies. We've been recommending selling on rallies in all our live sessions. We just did that yesterday in our live session, which was on last Friday's live session was postponed. So sorry for that. Arnold and all of us, Mr. Patak, all of us here, I would excuse for the change, but Mr. Reyes, Muhammad, Mr. Tasha, Mr. Patak, please come back on Friday. From this Friday onwards, Mr. Ajide, you are also welcome. Please, I'm sending all the links here to register. This Friday again, we will start the same schedule of doing the live sessions. Okay, and you can watch at that point as well that the dollar index head and shoulder reversal is going to stay mostly below that trend line. Okay, So now, can you visualize the analogy of the buy zone? We were here in the buy zone first. We were here in the buy zone. We entered the sell zone. We hit the backside of the trend line. So powerful resistance it provided, and now we are back into the sell zone itself. So that is the case study called Head and Shoulder, one of the most important case studies. Case one and case two, we are going to do a lot many practicals going forward. We'll take up that. All right. I hope that we are good with the theory and practical till now. Please do join us in the Friday live sessions. I'm going to send the link here. We we've got another 5 minutes to go. Please kindly stay back. So that those three were the case studies from buy zone to sell zone. And now what we are going to discuss is the three case studies from sell zone to buy zone. Okay. We can go a bit faster here. It's the same but reverse. We are going to end up selling the market. How we are going to end up selling the market? First, the market is in a downtrend. Okay. Second, it breaks the trend line. Okay, there's a trend line break. New channel is created. Fine. We got a new channel created. We can we can buy here, but the moment it prints a new low, we have to exit buying, and we got to find out a C where we will sell the market. So there's a new channel formed. Finally, we end up selling the market. So we were selling the market. We are now still selling the market. The trend does not change. It's the same. All right. That is case one for us. Case two, again the same thing. Temporary buy, okay, and then sell. So what happens? The downtrend line breaks. You can buy at the C, let it go and bounce. If there is a bounce at the outer trend line or the inner trend, intermediate trend line, you got to exit the buy and you got to enter selling. So again, after temporary buying, we are finally selling it. So first two cases of sell zone to buy zone, we are not aggressively buying. All right. And this is the case where we are going to aggressively buy. It is called inverted head and shoulder. The standing man is reversed. So now you have the head right here. That is your left shoulder. And here's your right shoulder. 5-step reversal. Step number one, trend line breaks. Step number two, the resistance is taken out. Step number three, watch out for the left shoulder. Step number four, project the right shoulder. Allow the market to drop back. And believe it or not, this drop is going to be so fierce. It is going to give us an impression that market is going to print a new low. Actually, I forgot to tell you that previous rally, this rally is called a bull trap in our technical terms. It will trap us. It's called bull trap. And that particular drop, this particular drop is called a bear trap. It will give us the impression that market is going towards new low, but it will trap us if we go and sell that. And suddenly hitting the backside of the trend line, step number five, and boom goes the market. This price normally returns. It would not return for a long time. And we have just witnessed this case. We've not only witnessed, we have traded this case. And here's the case study. I'm going to try and take a fresh one. Yes, it is. Okay, let me do the trend line first. A, B, C, Ds and trend lines go hand in hand. So that is your A, B. Now, those who have attended the previous sessions would easily understand why we are plotting ABCDs. It's a way to identify the or print, identify the wave structure. We normally enter the market at the C point. So here's the C, and D is still to form, but the market has already reversed. It may go a bit sideways for a while, but the most important thing that we want to highlight here is that is an inverted head and shoulder. All right. And did I tell you that the drop would be like a bear trap? You see that drop so fierce. Most of the traders on that particular Monday morning, if I remember, it was let me find the date, the 3rd February. Most of the traders got trapped here on the short side. Would have got would have got trapped here because if they don't understand the wave theory or the ABCDs or the inverted head and shoulder, what we are doing here, it was a bear trap. And just in next 24 hours, by the end of 4th February or 5th February, we were back in the buy zone. That was a test of the backside. It went to the Fibonacci 78%. You can see there, it was 88%. Sorry, the retracement was 88%. And then it produced a bullish signal. I can bring up the candlesticks again. And here you have the morning star. See that beautiful morning star appearing, brothers? So that's the story of the inverted head and shoulder. It's still not over. It's still beginning. We yesterday in the live session, it was a Hindi live session. We found out a great buy signal, another buy signal for dollar index, sell signal for euro USD, uh, a gold and pound, and so many bitcoins, and I think we did for Solana as well. I don't remember exactly, but please, please don't miss the live sessions on Friday. Tuesdays and Fridays, we are meeting for theory and the live sessions respectively. And believe it or not, the live sessions would give us the confidence to deal with the markets. All right. So we've done the practical implementation on charts. And if you do have any questions, let me know, please. And give me 1 second. I'm going to paste uh, all the links, all the 4 webinar links. You can join the English ones or the Hindi ones, whichever you want, because language at one point in time is not a barrier here, because most of the things we do on real-time charts, specifically the live sessions. So I request and urge you to please sign up. The live sessions are going to go on for the rest of the 2025. December 26th, 2025 will be the last live session for this year in English, and December 31st will be the last live session in Hindi. So we are going to do 50 live sessions each. I think we have done around 5 to 6 until now. All right. So I in this session, I think we've done for this session. If you do have any questions to be asked for now, please let me know. And kindly note this email address as well, harsh.jappi@gtcfx.com. Once again, for those who have joined us live on YouTube, well, thank you to all of you. And if you do have any questions, kindly paste. Yes, Narendra Kumar, good afternoon, sir. I have I have a habit of toggling the screen. Thank you for joining, Mr. Kumar. And if you do have any questions, ladies and gentlemen who are joining with the YouTube live, please do shoot us, and I will get back to you after the session is done. Thank you, Brother Arnold. Thank you, Mr. Patak, uh, Mr. Corazon. Uh, I hope that this time was fruitful for you, and I really wish that you come back again and register yourselves for the live sessions as well. We'll hope to see you back, sir. Yes, thank you, Mohammed. As always, thank you, Mr. Taha. As always, thank you, Mr. Patak. Thank you, Ajide. If you do have any questions right now or afterwards, after the session is done, kindly feel free to write an email to me as well. Be happy to get back. Anand, I'll hope to see everyone on Friday now for the live session in English. And until then, please do take care and God bless. If you do have any questions, feel free, Mr. Reyes, to send an email as well. If you want to send a feedback, that is always welcome. Once again, a warm thank you. Thank you very much for those who have joined us from the YouTube live as well. Thank you and God bless. Goodbye, Mr. Reyes. Goodbye, Ajide.